Welcome back. Markets this morning are lower. Take a look at futures indicating a triple-digit decline at the start of trading this morning. The Dow down 297 right now. That's 0.2%. The Nasdaq is down 1.5% right now, a decline of about 411. This after a major melt up these last couple of months. And yesterday, once again, a record finish with the president's historic trip to China with Xi Jinping. The Dow was up better than 300 points. It finished back above 50,000 with tech stocks leading the way after Cisco posted strong earnings. And the announcement of the NVIDIA H200 chips now being sold to 10 Chinese companies. The Nasdaq finished at another record high. It was up 232 points at 26,635, and the S&P 500 also in record territory this morning, up 57 points at 7,501 on the S&P 500. This market is non-stoppable. The president departed China earlier this morning. He wrapped up his two-day summit, this high-stakes summit, saying that he and Xi Jinping made, quote-unquote, fantastic trade deals for China to potentially buy U.S. oil. China committing to buying soybeans and Boeing airplanes, among other things. Xi Jinping, however, still warned President Trump right at the outset of the meeting that mishandling Taiwan could lead to an extremely dangerous situation between the U.S. and China. Joining me now is CFRA Research Director Ken Leon. Ken, good to see you. Thank you so much for being here. And I know we're coming off of a very strong earnings season, but let me get your reaction to all of this, including the China trip. How does this fit into your expectations for corporate earnings?
Well, it's great. Besides corporate earnings, it's really hard to find the bear case or a doomsday scenario, especially after a great trip and also what could happen in the Mideast with Iran. So I think what the market is looking at is really anticipating that the tail risk from a prolonged war with Iran may not be in the cards, and what we're seeing is a risk-on environment. To your question about earnings, 85% had earnings beat. And Maria, we have spoken before about this market in terms of not moving the needle to speculative is the ability to earn through. And we're seeing upward earnings revisions, which gives strategists more comfort about the valuation of the overall market or the S&P 500.
Yeah, I mean, it's a great backdrop. And don't forget, the president's big, beautiful bill had a whole host of things in there that are helping corporate earnings here with all those write-offs in terms of the tax changes in the tax code. But I was surprised to not hear expectations of higher expenses from corporate America, right? I mean, look where oil prices are this morning. They're higher once again this morning, and President Trump said that he and Xi Jinping agreed that Iran should never be able to have a nuclear weapon. Xi even claiming that he wants to help the president end the conflict. The president said that China made an agreement to purchase American oil, and the price of oil is at 104.55. The president said that he expects them to carry through on this. He spoke with Sean Hannity last night. Watch this.
We're going to make a deal on it. They've agreed they want to buy oil from the United States. They're going to go to Texas. We're going to start sending Chinese ships to Texas and to Louisiana and to Alaska. And I think that was another thing that was agreed to. That's a big thing. So I told him I'd love to see you buy oil from Texas and Louisiana, from the United States, Alaska. We've got so much of it. And he said he likes the idea. He'd like to talk about that. I think it'll happen.
So we'll see if it actually happens, Ken. But that would be a big victory on the president's side, given the fact that, you know, Xi Jinping has been buying oil at below market prices from Iran, buying 90% of their oil exports. If they buy oil on the open market from Louisiana and Texas, they'll be paying market prices with the dollar, Ken.
Yeah, that's right. But, you know, oil's a physical commodity, and it's going to take time for these markets really to stabilize. So the tail risk that economists are going to be watching is really its impact on the cost of living, input costs for manufacturing, something China is very keen on, even though they have reserves. And we'll see that, you know, percolate in areas like fertilizer and other key raw materials. But overall, you're right. If we have China as a trade partner, not only just for oil, but the ability maybe where President Trump eases on tariffs, that can open up tremendous trade that we never had before.
Ken, look at this market. We've got the numbers on the screen right now. Nasdaq's up 28% since the end of March. The Dow Industrial's up 10.7% since March 31st. The S&P up 18%. What a market to go public in, huh? I mean, look at AI company Cerberus yesterday, surging in the Nasdaq debut. Market cap now $95 billion after posting one of the largest U.S. tech IPOs in years. The chipmaker raised $5.5 billion. It sold 30 million shares. It closed up 68%. And we know that a whole host of others are not far behind. SpaceX is likely going to go public soon. It could reportedly release disclosure documents as soon as next week. That means that deal is coming. It's going to be the largest deal we've ever seen. Chat GPT maker OpenAI and Anthropic also not far behind, aiming for 2026 IPOs. What's your sense of IPOs and the impact on this market this year? I mean, if you've got a firmer market with the Nasdaq up 28% since the end of March, with companies, this is a ripe period to go public, is it not? And do you think that those three biggies mean that others will be behind and actually also use this opportunity to raise funds and go public?
Yeah, that's a great lead and something I personally watch very closely. And it's bigger than these three IPOs. Is if we have the IPO market open, there's $1 trillion of private equity investments that are sitting there trying to find a way to monetize. You either sell the business or you go public. Opening up the markets would be tremendous for private equity firms and good for Wall Street. So again, these are high-profile IPOs. These are real businesses. They're not speculative. And you know, again, to my first point, it's hard to construct the doomsday or bear case scenario right now.
Yeah, I agree with that. The IPO market is open. Thank you very much. Ken, it's good to see you this morning. Thank you. Ken Leon joining us on the macro markets this morning. Stay with us. We'll be right back.